Okay. This is Average Guy Finance 2.
Hey everyone, welcome to Average Guy Finance. I'm Vic.
I'm Darren.
Okay, so we wanted to talk this video about why should you invest in the stock market, or why shouldn't you invest in the stock market?
Yeah, and we thought that it might be fun to do a little bit of a role play where I will play the role of the person who's skeptical about the stock market, and Vic will be the person who's kind of for the stock market and answering some of my questions. So why don't we go ahead and start that? Yeah.
Okay.
Okay. Ready?
Okay. All right. So why shouldn't you invest in the stock market?
Well, I was going to start by asking you a question. My question is, so why do you like the stock market so much? Isn't the stock market just a scam?
A scam. Well, if you look at what the stock market is, it's you really just you're taking ownership of the economy. You're taking ownership in companies that are making money, making products, and you're getting some of the benefit of that. So like
But then, okay, so why should I put my money into the market? Why don't I just put it into a savings account?
Savings account. Okay, so what kind of percentage? Well, what kind of return are you getting on your savings account right now?
I don't know.
No, yeah, probably just about nothing. Like I think, like if right now with a savings account, if you're getting 0.5%, you're lucky.
Okay.
If you're getting a 1% return on your money, you're kind of lucky. And if you think about it, so.
But with the savings account, I know that it's always going to be there.
Right.
Whereas the stock market crashes and people lose all their money.
It goes up and down, yeah.
So
I guess that's like that they get nervous about that because they do, especially on the news, like when people hear about the stock market, and if they're not involved in it from like all the time, they're like, if they hear about the stock market, it's usually when stuff goes bad.
Mm-hmm.
So like when the stock market is on the news, it's going to be, oh my god, the stock market went down 30, 40, 50%, everyone panic. And that's what people think the stock market is, or it's some like risky thing, right? But if you look at it from like a long-term perspective, if you look all the way back from the 1900s to now,
okay,
it's basically just like a straight line up.
But isn't it like, like the elite controlling the growth of the stock market, the Illuminati?
The Illuminati? I don't know. I guess so. But it's like, okay, but like, if you like the way I look at the stock market is like you're just investing in companies that are making products that people want,
mm-hmm.
and those companies they're gonna create products, people are gonna buy it, and those companies are gonna make money, and that you're gonna be a part of that, and you're gonna profit from all that economic activity. So it's like, why wouldn't you want to be a part of that? And it's there's so much benefits. Like if you look at it long term, like you're going to be making money from the stock market. It's and as opposed to like a savings account. Like a savings account, I know your money is safe, I guess. But if you look at it, like if you have your money in a savings account and you're getting a 1% return.
Okay.
But you know inflation, right?
What's inflation? I don't know anything about inflation. What's inflation?
Okay, so inflation is basically every year money, as in cash,
mm-hmm.
it loses about 2% of its value every year.
Wow.
That's inflation.
Okay.
So if your money's losing 2% every year, but you're getting a 1% return,
mm-hmm.
then mathematically you're losing value every single year.
So money in a savings account is losing value every single year.
Yeah, if it's not paying you what inflation is, yeah.
Okay.
It is.
What about, so then what about, why don't I just put my money into a mutual fund? How about that?
Well, a mutual fund is the stock market as well, because the mutual fund is basically just like you're pooling your money with other investors.
Okay.
And that the fund manager is going to take that money and they're going to invest it.
Is that what happens, really?
Yeah, so they're going to invest it in stocks, or they might buy bonds and stuff like that.
Uh-huh.
So it's basically the same thing. Like you are invested into the stock market if you're buying mutual funds.
Never thought about it that way.
So what other things are you concerned about with the stock market?
Just like it just being a big gamble, you know, like it just what I hear, what my friends tell me is that investing in the market is like going to the casino. You know, most people lose all their money when they invest it.
Yeah, so I mean, there's kind of two different parallel stock markets.
Okay.
I think. So like there is and really actually like the past year, because a lot of new people have come into the stock market, and a lot of those people they're getting in with that kind of mindset that the stock market is a casino, and they're kind of playing it like a casino.
Okay.
So basically they're making risky bets, and they're thinking, oh, I'm going to double my money or triple my money in like a couple of months.
Mm-hmm.
And that's not really how it works. But if you take the long-term perspective and you're saying, okay, I'm going to try to get a 10% return or maybe like a 15% return like every single year. And then that's, to a lot of people, that it's not going to sound exciting. But if you do that consistently over 20, 30 years, like the math on that is amazing. Like you're going to end up with so much more money than when you started off with, especially if you just put it in a savings account. Because the difference between getting a 1% return on your money and getting a 10% return on your money is astronomical. It's exponential difference in that. I mean, we can go into the numbers and later and stuff like that, but it's the growth that you can get out of the stock market is so good. Like it's you're at a disadvantage, I think, if you're not invested in the stock market.
Okay.
Yeah. And I think like a way of thinking, like Karl Marx, right?
Yes.
So he talks about the means of production.
Right.
And it's like, well, the capitalists, they own the means of production. But like us as just average guys, we have the ability to own the means of the production. Like not all of it, obviously, but we can buy into the stock market, and now we're getting some benefit of it, right? So we just as average guys, we work for a living, right?
Yeah.
So I drive a bus, you drive a truck.
I drive a truck. He drives a bus. Yeah.
Okay.
Yeah.
So
That's why we're average guys.
Yeah. So we're working for a living, and if we just keep doing that, like we're kind of just hamsters in a wheel.
Yeah, that's what I feel like. Yeah. Most of the time. Yeah.
But if we're investing in the stock market, now all this economic activity that's going on, we're getting passive.
What economic activity are you talking about?
Okay, well, I just, in order to film this video, I went and got some batteries from the tuck shop.
Yeah, because I forgot to buy. I bought the wrong batteries for the sound recorder.
Yeah.
So yeah.
So I went and I got some Duracell batteries.
Okay. Why didn't you get Energizer?
Okay, but because we own stock in Berkshire Hathaway, and Berkshire Hathaway owns Duracell, right?
Right.
So a little, maybe tiny percentage of that goes back to us because we're shareholders of the product that we just bought.
Right.
And also all like the millions and billions of people around the world who buy Duracell every single year. All like a tiny portion of that comes back to us. Like that's the power of being involved in the stock market, having some ownership of the means of production.
Yeah, I'm coming out of character here. Yeah, because we own stuff. Yeah, we own a little bit of Berkshire Hathaway.
Yeah.
Yeah. Yeah. Okay. All right. So it's not a scam, is what you're saying.
No.
Okay. So now, when people tell me that they lost all their money in the stock market, how is that possible if you still own the stock? So when the market crashes and you own stock, you can only lose money if you sell, right? So my friend Dave, who insists that the stock market is a scam, who lost all his money in a crash years ago, he saw however much money he put in, apparently it was a lot, his life savings, and then it went down to, he had $2,300 in the market, and he said that he got scared and he cashed out. So I didn't understand why he cashed out. Like, if you own the stock, you own the stock. Why not wait for the market doesn't go down and stay down. It comes back, right?
Yeah. Look, as long as you're owning good companies, or as we recommend when if people are starting out, like you would probably want to invest in mutual funds and ETFs, and we'll talk about that later. But as long as you're invested properly, and then there's really very little risk. Like, people think it's risky, but it's actually not. Okay, so let's just take an example. Like, so in 2008, we had the financial crash, and the markets tanked. And for about a couple years, we didn't really do very well.
Yeah, I think that's where Dave lost all his money.
Yeah, okay. But so just by the numbers, we know that the S&P 500 during that time fell to $600.
Okay.
Or that's 600 points, right? But do you know where the S&P 500 is now?
No.
It's basically pushing 4,000.
Okay.
Yeah.
So explain to me what points are. I have no idea what points are. I don't understand what that means.
Well, it's basically like your it's kind of, yeah. It's the S&P 500 is basically the top 500 companies in America.
Okay.
And they basically they just take.
Is that where the term Fortune 500 company comes from?
Yeah. Essentially, yeah. So it's so you're basically taking the aggregate value of all those companies and the index, like whoever sets up the S&P 500, that they just that they attach a unit number to it. So the S&P 500 right now is worth like 3,900 points.
Okay, and back in the crash, it was down to 600 points.
Yeah, so it's like, yes, like maybe it went from 1,200 to 600, and you're thinking, oh my god, like, what just happened? I just lost all this money. But you got to understand, like, you're invested in companies that are making money.
You're invested in your country. You're invested in the economy.
Yes.
Yeah.
And you just understand, like, well, the economy is going to eventually recover. People are going to continue to buy products and everything like that. And so it's like, if you understand how the stock market works, and that's basically what our channel is about, like, we want to educate people about that, then there isn't really a risk in the way people understand. The only risk you can take is panicking and selling at the bottom. So
which is what Dave did, and that's why he lost all his money. Well, but if he had waited, if he had just left his money in the market, it would have come back, and he would have had more money.
Way more money.
Yeah.
Yeah, so if Dave watched our channel, I guess, well, we didn't have our channel back there.
Yeah, but I mean, yeah. Huh.
Yeah. Okay. So, like, what's like another thing? Like, what's
that it's being manipulated. What people tell me about the market is that it's being manipulated by crooked people at the top.
Right. Okay. So when you're investing in a company, like, let's say like Berkshire Hathaway, right? So we're shareholders of a company, and we're basically partnered with a whole bunch of other people who own shares of that company. But it's also the people who run the company, and in this case, it'll be Warren Buffett and Charlie Munger. They're also shareholders. So they run the company. It's in their best interest to make sure the company's doing well.
Okay.
Because if the company's doing well, they're going to profit, and if the company's doing well, we're going to profit as well. So it's like you have a partnership with those guys. So it's not, you're not like against the CEOs. You guys we're working together with the CEOs.
So the guys at the top are actually helping us. They want us to make money.
Yeah, so that they're going to make money too. That's
okay. Yeah. I'm starting to think that my friends that are naysaying about the market maybe don't know what they're talking about.
Yeah, but that's basically what our channel is about, like educating people on how everything works. And then once you understand it, you're like, oh, well, it's a no-brainer. That you obviously want to have a stake in the economy. Like, you want all that economic activity that's going on, you want some of that coming back to you. So that we're not just working like a subsistence level.
Right.
You know, eventually we want to get to a point where the economy's paying us, and that we can take it easy. Like eventually, we can eventually retire, and that's how. That's the power of being in the stock market.
Right. Okay. All right. Okay. you've kind of convinced me a little bit. Okay. All right. And see. It's hard to play someone who's skeptical about the market since.
Well, once you understand it, it's like it is a no-brainer. It's hard to be skeptical about it, but like I understand, like it's if you don't know how it works, it could definitely seem risky.
Yeah, I mean, just last year.
Of course.
It was all kind of murky to me, and I didn't really have an understanding about how things work. But now, like you said, it's a no-brainer.
Well, yeah, last March, if you turned into the news, you probably looked and it's like, oh my God, it's just like a straight line down for the stock market. And like I know my personal portfolio, it took a huge hit.
Right.
But like, I'm not selling at that point. I'm adding to it.
You want to buy when things are down,
obviously,
right?
Yeah, of course.
Because when you look at how everything has grown over the last year, everything has come back, and a lot of companies are even stronger than they were before. Well, not yet, but you can see them getting there if you look at the charts. Right?
And it was even actually surprising how fast everything came back.
Yeah,
that's what everyone was like. Yeah, it was like, oh, whoa, like everything's like pretty much back to where it was pre-crash with a lot of companies. Some companies are still down, but.
It kind of if you were a conspiracy theory person, you might think that that this whole thing was orchestrated to crash the market and bring it back up. But we're not those kinds of people.
But you know what? If it was, so who cares? No, because
people die. So no.
Okay, well that's a bad thing. But in terms of the actual stock market, it was a good buying opportunity through March, April, and May. Like if you were buying at that point,
you're laughing.
Yes.
You're laughing right now.
Yeah.
Okay. All right.
So you're convinced?
Yeah. I'm convinced. Yeah, I'm convinced. Well, I already was convinced. I'll slip back into that character.
Yeah. Okay.
Okay. All right. Yeah. No, I'm convinced. Right. But I'd still rather. Yeah. All right. Yeah. No. Yeah. I'm convinced. Yeah. It's hard. It's hard to play a character like that.
Yeah.
You read about fine actors, right? And after they've played a character, the character stays with them for a little while. And I feel like I can feel that skepticism staying with me. Like I just want to take my money and not put it into the market. I just want to buy like a $20 pasta, on Uber Eats or something. Just to kind of spend my money that way.
Yeah, well, there's kind of the instant gratification of getting your $20 pasta, but it's like, I basically spent this past year convincing you to invest in the stock market.
Yes,
and you can see the benefits of that.
Yeah.
So it's it's hard to come up with reasons not to be in the stock market. That's how it's how good it is.
Yeah, I was trying to look at it just from every kind of naysayer angle, right? To see why I shouldn't do it, and I really couldn't. After you go back, like Vick was saying, just through the whole history of the market, there's no losing. Like even through crashes, it comes back and it gets stronger. And if you've got your money invested in it, it's you're going to do well in the long term. But you have to think long term. If you think that you're going to get rich next week, you might, but it's probably not a good idea it's definitely not a good idea to be thinking about it that way.
Yeah, and I think most people who, when they start investing, they have that 30-year time horizon. Like they're not going to be retiring for another 30 years. And like if you think about like all the economic activity and innovations that's going to happen in 30 years, it's crazy. Right. So like let's look at like some examples. So like we were buying some real estate stocks.
Yes.
So we bought
Ryokan. Yeah.
And that's interesting because the plaza like right next door to our building is Ryokan. Is a Ryokan plaza, right?
Yeah.
And they're going to turn that plaza. Right now, the plaza is just basically like a parking lot with a building in the middle.
Right. It's a little rundown mall that's just on its last legs.
Yeah.
But, yeah.
And it's been there for forever.
Forever, yeah. It's a staple here in this town that I live in. But, yeah.
But Ryokan is going to turn that into huge towers everywhere.
Yeah.
And there's going to be retail, there's going to be residential, maybe office, but
Yeah, there's
like,
going to be green space, there's going to be trails and
Yeah.
bikes. And
so like RioCan's a company that's basically, they're going to transform not only the neighborhood right here, but like neighborhoods across the country.
Mhm.
And the value that's going to be created from that is tremendous over
Yeah.
the next 20, 30 years.
Right.
And we're going to be a part of that.
Yeah, yeah, yeah. I've already seen how much RioCan has gone up since I bought it last year, and as soon as I bought that stock, you start seeing RioCan everywhere. Like you start seeing the RioCan signs everywhere, right?
Yeah.
Oh, and then you think, I mean, it's kind of silly, but it's true. I think, wow, I own a little bit of that building, right? I own a little bit of that, whatever they're doing there. That's
Yeah, it gives you pride of ownership.
Mhm.
Yeah, and it's like it completely changes your perspective on how things were run, because okay, it's like I own shares in Bank of Montreal.
Mhm.
That's where I bank.
Right.
It's a completely different feeling walking into a Bank of Montreal knowing that I'm a shareholder.
Right. Yeah.
Right, because then it's like previously it's kind of, maybe you have kind of like an adversarial.
Yeah, you walk into the bank and you think, oh, the
Yeah.
big bank taking all my money.
Yeah.
I'm just a little guy and I can't
Yeah.
do anything about the bank. But once you own shares in the bank,
And once you realize that, hey, every 3 months, this bank is sending me a check,
yeah,
and it's going like straight into my account, then it's like, oh, well,
Dividends.
yeah, it's like I can see that's a different way of looking at things.
And what about
Yeah.
paying your cell phone bill every month? You bought Rogers just now, right?
Right.
Yeah.
Yes.
And so that changes the way you look at the bills you pay too when you start buying into those companies.
Yeah, it's not just like this like the means of production. It's not just like sucking the life and soul out of you, right? It's like
this video.
yeah, you're getting you're getting a piece of the action,
Right.
and that's what's so good about it.
Mhm.
And if you're not invested in the stock market, you're not. And that's just like how it is. I mean, that's just life, and it's like
If you're not investing in the stock market, you're just kind of being run into the ground. Like you're part, whether you realize it or not, you're part of the whole machine, right? The
Yeah.
whole system. But you are just a part that's not benefiting from it. You're just a part that's replaceable. Well, that's maybe too cynical.
no, you're very replaceable. Like it's like, but like I mean, it's yeah. I mean, if you're like an Amazon worker and they just like basically run you into the ground. We don't have shares in Amazon, but it's like I can see how people think about the economy and stuff like that. It's like I'm working like all day, and it's like I'm not getting any advantage out of this.
Right.
It's like what am I doing?
Yeah.
So it's like okay, maybe it would be a better system if like everyone already like right from birth get a piece of the economy.
Yeah.
And that's actually an argument that people have made.
Right.
But the way our system works is that you actually have to intentionally go out and buy your way into the economy. That's just how it works. I mean,
Right.
we didn't make up the system, right? But it's
But it's easy to do, and that was the other thing too. Like I thought it was like a whole buying stocks and trading stocks was like this whole far off, complicated thing. But it's so simple to start doing, and then like you said, once you start doing it, just your whole perception of things changes.
it's basically a couple of mouse clicks.
That's it.
I mean, it's a lot easier than going out to work every day.
It is.
I mean,
Yeah,
obviously you're going to go out to work every day and stuff like that, but it's compared to the jobs that we do, investing in the stock market is like super easy.
It is.
Yeah,
I can see why people day trade. I don't have the heart, the wherewithal, the what's the word I'm looking for, the nerve, I guess, to start
Yeah.
day trading because that's a little risky. But
No, we don't recommend day trading really, but
no. But I mean, some people swear by it. But no, we're talking about long-term, solid investing.
Yeah.
Over 20, 30 years, 40 years. Yeah. There you go.
anyway, so I think we kind of answered the questions there, right? That's so.
Yeah, I think so. I think the skeptical guy is understands a little bit more about things. Maybe skeptical guy should stop listening to his friends who really don't know what they're talking about, right? Who are just kind of angry at life. They're angry because they've been grinded down by the system that they didn't know how to.
Yeah, and
take advantage of.
I bet if you gave them a couple shares in the S&P 500, they would just completely change their mind.
Yes. Yeah.
So like once you actually for a couple months own something like that, and then you're getting some dividend payments, and you're like, oh, stuff is happening, and I'm getting some money into my account.
Getting your first dividends payment that really was life changing. Like when you just see money coming in from, just.
So that's why like when we first started talking about investing, that's why I intentionally I advise you to buy RioCan, because RioCan pays dividends every month.
Right.
So it's basically like RioCan, they collect rents from all the retailers that they have, and then every month they pool all those rents collected and they distribute out to the shareholders. So that's what I was like, I knew that if I advise you to buy something like RioCan, and you're going to be able to see every single month that a little bit goes into your bank account, and you're like, oh, I can see the advantage of doing this.
Oh yeah.
Right? So
yeah. There you go. All right. So is that? I think that's that one's.
Yeah. It's a pretty easy question to answer, but like it's an important question to answer.
Yeah.
Because I think like that's like it is something that people get tripped up about.
Yeah,
right?
And yeah, it's something that people make a lot more complicated in their minds, and yeah, I know I did that, but it's not complicated. Yeah. It's very easy.
Yeah, we all explain it all. It's super easy, and it's a no-brainer, guys. So, anyway, thanks for tuning in.
Thank you.
All right, see ya.
We'll see you next time. Sorry about the lighting. The lighting's bad. We'll fix that. Okay.
All right. That was good.
That was good. I like.